fine. Mustn't I make a little bit brighter like this? Okay, just like that. So now, if I look at exercise 15, now when I do the AOL, and I've been saying this since the beginning of the year, first thing you do is you go put your signs. Remember, debit means left and credit means right. So, you're going to write for yourself. Plus, minus, minus, plus, minus, plus. First thing you do. Okay. Now, I'm reading transaction number 1. Transaction number 1 says, now the first thing, remember what I said? First thing I want to know is the transaction cash or is it credit? So, the owner made a direct transfer into the business account to increase his capital by 15,000. It's in the current bank account of the business. So is this cash or credit? Why do you say credit? What is credit? What is credit? Well, credit is debt. So when I talk about, so transaction is either cash, meaning money goes into the bank and goes out of the bank, or the transaction is on credit, meaning it's on account, meaning it's debt. And it can be either we sell on credit or we buy on credit. Okay, so let's read this again. So, don't confuse it with the bank is being credited, because remember, if the bank is credited in the bank statement, it just means the bank became more, which means the money came in. Do you see? Okay, so let's read this again. If the owner made a transfer into our bank account, can you see? It's into our bank account. What is bank? Bank is cash. Okay? Bank is cash. So now, yes, baby. Now, if I look, if bank is cash, please stop. If bank is cash, and the owner put money into our bank account as capital, is that money coming in or money going out? It's coming in. So it's a CRJ. So I'm going to write CRJ. And what's my rule for CRJ? Bank is debit. So immediately I'm going to write bank. Now please look at this. Look at this. My bank is what? It's an asset. An asset, and the amount is 15,000. Did it plus or minus? How do you know? Because the cash in my bank increased. But now look how I can see that. My bank is debit. If I go to assets, the debit side, meaning the left side, what is it? A plus. Okay, so I already got 1, 2, 3 marks. Now, because it's remember, a CRJ has got 3 different documents. You have a duplicate receipt if you received the money in your hand. You have a cash register roll if it was cash sales. And you have a bank statement if it was done directly into your bank. So this one he did directly into my bank. That's why it's going to be a bank statement. So I already got 1, 2, 3, 4 marks. Now, what would be credited? Capital. And what is capital? So owner's equity, ne? And it's on the credit side. So it's also a plus. And now can you see? I only have 2 signs in a row. So there's already 1, 2 signs, meaning the third one is a 0. before we go on, I just quickly want to show you this. You need to know the classification of stuff. So your assets. Assets is more the 9 assets. Let's quickly look. It's land and buildings, vehicles, equipment, bank, petty cash, cash float, trading stock, debtors control, fixed deposit. Oh, the D doesn't come out. So you remember the song, land and buildings, vehicles, equipment, bank, petty cash, cash float, trading stock, debtors control, fixed deposit. You want to sing it with? Owner's equity also got a little song. So owner's equity, ne? Now look at this. It's capital, drawings, income, expense. Can you see C die? C die. Not he die. C die. Okay, now let's quickly go. Owner's equity is capital less drawings plus income less expense. Capital less drawings plus income less expense. Capital less drawings less income plus income. I am confused. Let's go again. Capital less drawings and income less expense. Capital less drawings and income less expense. Capital less drawings plus income less expense. Capital less drawings plus income less expense. So you know now, assets is land and buildings, vehicles, equipment, bank, petty cash, cash flow, trading stock, debtors control, fixed deposit. Owner's equity is capital less drawings and income less expense. Okay. Now, liabilities is creditors control. That's all. Okay? So liabilities is debt. It's my debt. Okay, so let's go through it again. Assets is land and buildings, vehicles, equipment, bank, petty cash, cash flow, trading stock, debtors control, fixed deposit. Owner's equity is capital less drawings and income less expense. Liabilities is creditors control. Yeah. So, now, let's go back. Number 2. Number 2, we received, please. So if I see the word EFT, I know it's money. So we receive money. Is that cash or credit? That's cash. So now I know I'm working with bank, ne? Because the cash is always bank. Cash is always bank. So now let's go look. Is it money coming in or money going out?
Money coming in.
It's money coming in, so it's a CRJ. If it's a CRJ, the rule says bank would be debit. So I can immediately write CRJ, bank, assets, plus. Now, because, remember, there's 3 documents. So, they say it's an EFT, meaning it's direct. So, I didn't receive the cash. It wasn't a sales. So, it's a bank statement. Okay, why did I receive an EFT? It's from Van Wyk to settle his debt. So, someone who owes me money is called a what? A debtor's control, ne? Okay, now, a debtor's control is also an asset. Ne? There it is, debtor's control. So, it's going to be a plus and minus. Because, let's quickly explain. The money in my bank becomes more. That's why assets plus. But the debtor's debt, if he pays me, what happens to his debt? Does it become more or less? It becomes less. So my debtor asset becomes less, my money asset becomes more. Okay. So, can you see? I've got two signs, meaning the rest is all zeros. Don't forget to put your zeros. You guys start to see how it works. Let me do one more. Number 3. We purchase stationery on credit. Is this cash or credit? Credit. Now, it's credit. Did we buy or did we sell? We buy, so it's a CJ. The rule for CJ is CCC. Creditors control credit. So I'm writing CJ, creditors control. Now, I'm asking you this. What is creditors control? It's a liability, ne? So, it's on the credit side. So, liability on the credit side will plus. And the amount is 820. And what did we buy?
Stationery.
So, stationery goes here. What is stationery?
Equipment.
Ah, no, man. Stationery is pens and whatever. It's equipment is a table. So let's quickly think. What is stationery? Asset or an expense? It's an expense. It's an owner's equity, ne? It's on the debit side, so my owner's equity will minus. Can you see? 1, 2 signs, meaning this will be a 0. Now, I quickly want to show you something. Okay, before that, is there a question?
Why does it minus the owner's equity? Doesn't it increase the owner's equity?
Remember what we said? Owner's equity, what happens to the expense? It minus. Why? Because in the end, it's most capital, less drawings, plus profit. And the more the expense becomes, the less the profit becomes, the less the equity. You guys, I hope you are listening. So, I want to quickly give you a trick how to remember the documents. Okay? So, the CJ and the DJ is both invoices. But the one is, stop it. You're wasting time. I'm trying to teach you something. And it's now recorded what I'm saying. So, the one is a duplicate and the other one is the original. So this is how I remember it. With the creditors, can you see? The C, I just finish up and it becomes a O. You see that? Can you see there, the DJ, it's a duplicate invoice. DD. Okay, so let's go again. So, it's a CJ. I know it's going to be an invoice from the CJ, but I want to finish it up and make it an O. Original. Oh, just look. When it's CJ, you take the C and you finish it to make it an O. The DJ, so that I know it's an original. It's a way to study. No, it's an original because I'm the client. So they give me the original. Remember, the moment I issue a document, I keep the duplicate. But now, when it's CJ, I am the client, so I get the original one. Now, just in a test, to remember where does the O and where does the D go? But original invoice, because you received the invoice.
What makes you say DJ on the general?
DJ would be credit sales.
So somebody bought from me through credit.
That's it. Someone bought from me on credit. And a DJ Can you see duplicate because he's the client, so I keep the duplicate. Does that make sense? This is just a study method. Ne? But the real reason why is I'm the client, so I get the pretty one, the original. With the DJ, I give the original away to the client and I keep the duplicate. Okay. So, quickly try number 4 on your own. I'm going to keep it up like this that you can see it. Oh, I'll do 4 with you because it's that song again. So now, if I do 4, remember now, it's DJ, ne? Why do I know that? We sold goods on credit. So I know, okay. So I see it says I sold goods on credit. So I know it's a credit and I sell. So it's a DJ. And a DJ is a DDD. So I know DJ, debtors control, debit. Okay. Now DJ is going to be a duplicate invoice. Okay? Because I'm selling. Now I've got a song again. Remember when we did the cash sales, we said bank sales plus 0. Cost of sales, trading stock minus 0. So, remember when we did the cash sales, we said bank sales plus 0. Cost of sales, trading stock minus 0. Now it's credit sales. The only thing that changes is it's not bank because it's not cash. It's now credit. So I say debtors control, sales plus 0. Cost of sales, trading stock minus 0. And the plus will be the selling price and the minus would be the cost price. You see? Because there's 2 things happening with a sale. I bought this remote for 100 Rand. So that's the cost price. Okay? Now I sell it to you for 150 Rand. So now you owe me 150 and my sales is 150. But I'm also losing this remote now. So my stock becomes less with what I paid for it, the 100. And the cost of sale shows the cost of the stock that I lost. You see? So, what was the sales price? Can you see? 920. Ne? Now, what is the cost price? They say the markup is 100. So I'm going to say 920 times 100 over 100 plus the markup. Can you see it's going to be 200? So whenever the markup is 100, the cost price is literally half. You see? Okay, so it's going to be 460. I'm going to stop and I'm going to ask. Okay, go.
It says bought packaging materials from Plastilon on account for 790 rands. So since when we buy on account, we're the one losing money, so it's CJ. So on the journal you write CJ.
He's right.
So what did we buy? Packaging material. So where do we write that on the debited? And then since we have a CJ, what did ma'am say we have? We said we write the C, and then since we are the ones we finish it off and we say what? Original. Ooh, come on guys. And then it's invoice. And then here, since we were credited it, it's credited control. Then here, is it an asset? No, because we don't keep it, so it's not an asset. So just write 0. And then on owner's equity, are we plus or minusing? Yes. And then here, because our liabilities are up, so now we collector even more, it's a plus. Oh, we owe, sorry for Venek. Yes, man.
Okay, brilliant.
Thank you.
Okay, anybody else who wants to do number 6? Okay, I'll do it. No, if you say Tsepang, then it means you got the vision, then you have to do it. Yeah, so let's do number 6. Number 6, they say, receive. Now, be careful not to say, oh, receive, I got money. Because they say here, I receive an invoice. So it means I was buying on credit. So it's a CJ, it's a creditor's control. A CJ is an original invoice. And I know my liability will plus. You see? Everything already just by identifying I bought on credit, I can already do all of that. Now I see, what did I buy? I bought merchandise, and the accounting word for that is trading stock, which is an asset, meaning owner's equity is 0. But now I don't have a figure yet. And the figure would be, they say it's 3,246, but I'm not going to owe all of that. I'm going to owe 5% less because they give me a discount, which means I'm going to owe 95%. Right. So what's the amount? What's the amount? Three, 883. Is it 0.7? 3087. So we make it 4. 3084. Okay. Next one, they say the owner withdrew business money. Can you see it's money going out? So it's a CPJ. CPJ is always a bank statement. Bank is credit, meaning assets will minus. Why did the money go out? Because the owner took, so it's a drawings. So the owner's equity minus. If you struggle with what should be what, you use this to see if it's a AOL, and then you use your roadmap. Drawings is a owner's equity. It's on the debit side. The debit side of owner's equity is a minus. Bank is an asset. It's on the credit side. Assets on the credit side is a minus. Okay. I've got 2 signs, meaning liability is 0, and the figure is 680.